It's unbelievable how disorienting it is to lose your home. I tell people I literally lost everything, and the easiest way to get your arms around that is the very first thing I bought the next day was a toothbrush because I no longer owned one. That's how complete your loss is.
I'm sure a lot of people are familiar with the recent events and devastation of Hurricane Helene. So today we have Ken Klein, a professor of law at California Western School of Law in San Diego, California, to join us to discuss the sexy and interesting topic about homeowners insurance and what's going on with people in North Carolina and along the Eastern U.S. seaboard that have experienced devastation. I was reading an article, Ken, that said that only 5% of people during Hurricane Helene are even insured. Is that an accurate number, you think? And is this a pretty typical scenario when you do have these natural disasters?
Right. If it is flood insurance, if that number is talking about flood insurance, that wouldn't surprise me at all. If it is talking about insurance for wind, that number would be very surprising. It would be much lower than I would expect.
And you can kind of talk a little bit about regular homeowners insurance. I was reading an article that you wrote, and I think in this article you state that 43% of homeowners incorrectly believe damage from heavy rain flooding is covered under their standard insurance policy, and 28% think hurricane storm surge is covered, and 29% think earthquake is covered. And of course, none of those are covered on standard homeowners insurance. So what is standard homeowners insurance and what does it cover?
Standard homeowners insurance nominally on its face covers any bad thing that happens to the house. But what then occurs is there's a bunch of exclusions. And as the insurance companies have learned over time what kind of things happen with some frequency, those exclusions change. So today, if you have homeowners insurance, and you almost certainly have it because you have a mortgage, and so that has required you to have it, it covers fire, it covers wind, it covers normal things like plumbing leaks. It does not cover flood. It does not cover earthquake. And so you're going to see huge conversations. Think what happened after Katrina, for example. When you have a big wind event and you have a big flood event, that's true in a lot of hurricanes. There'll be enormous amounts of conversation between a homeowner and an insurance company who, if the homeowner doesn't have flood insurance, as to whether that water got into the house and damaged the house because of wind. So for instance, wind took out the window or took off the roof and then the water came in, or because of flood, meaning things like storm surge.
Who's the arbiter of that then ultimately? Is that the insurance company is the one to decide whether it was the wind that caused the damage or the flood that caused the damage?
It sort of happens in a sequence. So what happens is if you have insurance, you submit a claim. You tell your insurance company this bad thing happened to my house and come look at it. And they'll have an adjuster come look at it and they'll make a report. And internally in the insurance company office, they'll come to a conclusion. They'll report that conclusion to the homeowner. They'll basically say, our insurance covers this, or because it was wind. Our insurance doesn't because it was flood. If the homeowner disagrees, they make it into a whole conversation with the insurance company. If that doesn't solve things, they might well ask the state insurance department to step in. The state insurance department really rarely is going to impose an answer. And so then if the homeowner still doesn't like the answer they're getting, they're going to have to decide whether they want to bring a lawsuit and challenge it. And that's the way it plays out.
I was reading an article that you wrote from, I believe, 2012, and in the bottom of it, it said that you lost your home to wildfire. Was this back in like 2003? So, I mean, you've actually gone through this process, right? Not with flooding, but with wildfire. And of course, fire is covered. How was that process? And you have firsthand experience with this, with losing a house.
Right. And I will tell you, just as an aside, as a result of that experience, I've gotten involved in working with a lot of homeowners who have lost their homes in a lot of situations. And both of my parents are from the New Orleans area. And so when Katrina hit a few years later, a lot of them got impacted. And I was the only person they ever knew who had lost their home. So I've had a lot of these conversations, both in family and in volunteer work. It's really hard. It's unbelievably hard. And let me just start by saying I have perfectly good insurance. I have no problems. But it's unbelievable how disorienting it is to lose your home. I tell people I literally lost everything, and the easiest way to get your arms around that is the very first thing I bought the next day was a toothbrush because I no longer owned one. That's how complete your loss is. But it is really surprising to you how psychologically and emotionally anchoring your home is in your life. And so when you lose it, it is quite the journey to get back home.
So what was the actual process like in terms of like the paperwork? And also, like, I mean, did you have a warning? Were you able to evacuate the house and get to safe ground?
In terms of official warning, we did not. California, in my part of California, we've learned a whole lot. We're way better now at that kind of thing. But in those days, we were not. And so I don't want to get too deep in the weeds on this unless you want to. But the overview is there had been a fire that started about 10 days earlier up in Riverside, which is up the road a good bit from San Diego. We had a full third of our local firefighters up in Riverside fighting that fire. Then our fire started in the backcountry at dusk. And so almost all of the fire resources of San Diego County were already deployed when the fire hit my neighborhood. So for instance, on my street and cul-de-sac of 50 houses, there were only 4 firefighters available to fight the whole thing. Wow. And we never had an official evacuation order on my street. We were one of the last streets hit in that fire. We lost 2,400 homes in that fire in San Diego County. Mm-hmm. We never had an official evacuation order. But when you have, on a clear sunny day, you have no sun. It's all dark and gray. And you have a little tornado of ash swirling in the middle of your cul-de-sac. It's time to leave. And so we did. We know from a neighbor's garage burn up and their computer stopped, so we know exactly when the fire got near our house. We know that we ended up evacuating about a half an hour ahead of that fire.
The same article I was reading where I found this information out, you also basically say that oftentimes the value of the insurance is what someone could sell their house for. So if you could, if the market value of your house is say $300,000, then maybe you're insured at $300,000, but that's not necessarily the cost to build a new home.
Right.
So there's.
I'm sorry, I don't mean to interrupt.
I was going to say, but so it seems like, basically what you're getting at was that I think you said 3/4 of people that have homeowners insurance, there's essentially a gap between what it would cost to rebuild the house and what the value of their insurance policy is.
Right. And there's a whole lot there. So as a general matter, what it costs to buy a house is just an entirely different thing from how much it costs to build a house. They're just not related numbers. Think about a house typically as many years old. So think about the differences between the retail cost of buying a 20-year-old home, the retail cost of buying a brand new home, and the wholesale cost of building a new home. Those are just, or the retail cost of building a new home, right? Those are just completely different numbers. They're not related numbers in a lot of ways. And most homeowners, the only thing they know about their home is how much they paid for it. Some homeowners follow how the neighborhood's doing, right? So they know what homes have sold for in the neighborhood. That's not really going to help them much in figuring out home construction costs. Now, not back in 2012 when I wrote the piece you read, but now the Federal Home Finance Association, which is the government entity that oversees lending, mortgages, they now require that mortgages be backstopped by replacement cost coverage on homes so that if in escrow things are doing the way they're supposed to be doing, then your coverage is written to what it costs to rebuild the home. That was not the case then. Doesn't solve the problem. Whether you lose your home in a catastrophe or not, the odds are very, very high that even if you have coverage, it's not going to be enough and it's not going to be close.
As I mentioned, that 5% number about only, I believe in this latest Hurricane Helene, that only 5% of people even had flood insurance. But then flood insurance, the limit is $250,000, which I mean, and flood insurance is fairly expensive. So the people that probably can afford flood insurance, I mean, they might have an $800,000 house or something. It doesn't even come close to even protecting that asset.
Right. The only people in the country who are required to have flood insurance are if you buy a home on mortgage in a federally declared floodplain. Then you have to have flood insurance. Everyone else doesn't have to. And the reality is that the voluntary take-up rate of flood insurance, in other words, people who have a choice to buy it or not, runs about 10% nationwide, which isn't much different from earthquake or anything else you have a voluntary choice about in insurance. The only insurance product that people have a choice and they buy in huge percentages turns out to be homeowners, where of homeowners who have a choice, about 3/4 of them do buy basic homeowners insurance. And by the way, often think it's covered flood. And only larger their surprise that it doesn't if they have a flood.
There's a paper, a research paper I read, I believe it was a 2021 paper. In that paper you mentioned, I mean, you're talking specifically about California, you live in California, and you said that there's something like over 2 million houses that are essentially in wildfire zones. And the state of California has a little under 15 million houses. So you're talking like, so does this mean that essentially like almost 15% of all houses in California are actually built in a fire zone or a potential fire habitat?
It sure could be the case. I've not done the complete math on how many homes are designated to be in a high fire risk area. I know I've seen studies that say that in my city, San Diego, big city, that I think over 80% of San Diego County are in designated high fire risk zones. LA would not be that. LA is much more of a concrete jungle. But there's a whole ton of California that isn't in a big city, and it's all at high fire risk.
We hear nowadays about how there's certain places in Florida and California where people aren't able to get homeowners insurance anymore just because if an insurance company is losing money, then they won't be in business very long. It's kind of bad business practices to operate at a loss. And as houses are built either along the ocean where you could get knocked down by a hurricane or in California or Colorado, whatever, in a fire zone, if you have a house, you want it to be insured. But if you're the insurance company, there's houses that you really just don't make a business sense. I mean, it seems like as we have more natural disasters, whether it's fire or hurricanes, just more areas are going to be uninsurable. Is that what you're finding?
It's certain. I think about Florida a lot. Florida is, I believe, the highest natural point in Florida is below 350 feet above sea level. The entire state is either swampland or just barely above swampland. And so that puts it at just generalized risk because of topography. Now, because of where it's located, it's in Hurricane Alley, right? And then you put on top of that the effects of climate change, and they are making weather events, mass weather events like hurricanes, both larger, physically larger. So all of a sudden we're seeing hurricane maps where the footprint of the hurricane seems to cover the entire state. They're making them more frequent, and they're making them more intense. You put all those things together, and an insurance company has to take a real hard look as to whether there's a meaningful business opportunity there.
I was reading an article, I mean, it was an NBC article, so who knows how accurate this number was, but it said that in 2024, 1 in 8 houses are not insured just because they're in areas that are uninsurable. You think that number is actually accurate? Like, what's the actual number in 2024?
Well, again, we'd have to think about, are we talking about fire or flood? If we're talking about flood, I think that it's far more frequent. If we're talking about fire, well, 2/3 of the homes in America are under mortgage. And so they're all insured because otherwise they can't have the mortgage. Of the remaining third, the last numbers I've seen are about 75% of them are insured voluntarily. And that leaves, as a grand total, it means that the total number of homes insured for fire seems to hover right around 90%, sometimes a little high, sometimes a little low. We have about 10% of homes that are uninsured for fire. Now, why is that? So those are people who don't have a mortgage, and they are comprised of two groups. They're comprised of people who have paid off their homes or people who have inherited their homes. Okay? People who have paid off their homes, for them, I think there is a lower frequency of them not having insurance, because home insurance, even with spiking prices, is still pretty cheap, certainly cheap compared to any other homeowner's product. They've been in the habit for 30 years of buying it anyway. They'll likely continue to buy it. The others are folks who inherited the home, and what the people I'm really worried about are the people who did not inherit it because they live in wealthy families, but inherit it because they have families that don't have wealth, and this is the single asset the family has. This is the generational wealth of the home. And so they don't have a lot of income, and they don't have a lot of money in the bank, and so they're not buying insurance because they can't buy insurance, because they live close enough to the margin that rising premium has priced them out. And they don't have the option to move, and they don't have the option to make their home resilient unless the government supports them. So they're just sitting there living on a hope and a prayer that their home doesn't get hit, because they don't really have options.
We often hear in the news about how a lot of people aren't able to get insurance, like I said, in Florida and California. Is this a big deal? Is this overblown by the kind of the corporate media, or you think this is actually like a real scenario? I mean, you're saying, everyone that has a mortgage obviously has insurance, else they couldn't have the mortgage. So it seems like this might be overblown then, from what it sounds like.
I don't know that it's overblown. And let's back up to that bit about the mortgage. The mortgage requires insurance not to protect the homeowner. It exists to protect the bank, to protect the loan. So what the mortgage says is, if the homeowner cannot annually provide proof that they have homeowner's insurance, that doesn't mean the home gets foreclosed on. What it means is the bank is going to go out and buy insurance for itself that's called force-placed insurance. And that insurance is more expensive and only covers the bank. It doesn't cover the homeowner. It only covers the loan. And then that premium is simply added to the mortgage payment. Now, that can, of course, lead to foreclosure if you stop paying your mortgage. But those homes are still insured. The homeowner isn't insured. The loan is insured. I don't have good statistics on the frequency of that occurring. So now I've lost track of your question. I'm sorry. I think I've wandered off down a rabbit.
No, just kind of, to the last thing you said, though, but you said you don't have good numbers, but what would be like a ballpark figure of the 66% of homeowners where the bank essentially owns the house, their home? What percentage of those lost insurance and the bank is forcing them to pay their high premium?
I would be surprised if it is a significant percentage. I'm speculating here. And the reason I would be surprised is because force-placed insurance is more expensive than homeowner insurance to the homeowner. And they're going to still have to pay it. So they didn't stop. So they will very quickly find out, if they stop buying insurance, that it wasn't it wasn't saving them money. It's making their situation worse to be in this box. So then we're only really concerned. So I don't think that probably happens very frequently, or not for very long. So what we're really concerned about is you cannot get insurance, that there's no insurance company that will sell you insurance. And every state, I believe, I could be wrong, as to fire has, and wind, has a last resort insurance plan of one form or another, so that there is a program that will insure the house, nothing else. It won't insure, for instance, anything in the house. but it will insure the building itself as an insurance product that you can get. So for instance, in Florida, it's Citizens. In California, it's the FAIR plan. So there is always going to be some insurance product of last resort. As to fire, as to flood, almost all flood insurance is through the National Flood Insurance Program. It's NFIP insurance. And NFIP insurance up to $250,000 is out there. It's always available. So again, I think that there is a very low incidence, probably not a statistically large instance, of people involuntarily being completely bare, meaning that they wanted insurance and they could not find an insurance product of any sort to cover them.
How much has homeowners insurance changed over the years and the circumstances changed? I was reading that the first homeowners insurance policy wasn't developed until 1950. And of course, in 1950, the average house wasn't that expensive and wasn't even 1,000 square feet. Now the average house in the U.S. is over 2,000 square feet, over double the size. And like these houses now are a significantly bigger percentage of people's total net worth. They're much more expensive. There's a lot more building codes and regulations, which makes the price of homes more expensive to build. And so it just kind of seemed like there's people that had flood insurance in the 1920s and insurance companies stopped offering it because they weren't able to make a profit on it. So, and then every year as you get, like these $1 million mansions in Florida and California on the coast, and having these $1 million mansions in the mountains in California where they're susceptible to fire. It seems like part of it is like maybe people are building too expensive houses in places that they shouldn't be. And just overall, all the houses are more expensive.
I think all of that is true, but I will tell you that I don't worry so much about people who have a lot of money. I mean, I do worry about them, right? But I'm really, really concerned about people who have very little money, right? I'm not as worried about the multi-million-dollar vanity home in Miami Beach as I'm worried about the fifth-generation fishing and agricultural family on the Mississippi coast, and out in the Channel Islands, those kind of places. Those are the folks who really, they don't have options. They can't pick up and move. They can't build resilient unless they, win the limited resources that most states are offering. Those are the folks I really worry about. I worry about the folks in my county who can't afford to live close to where they work because real estate is so expensive in town. And so they live way out up in the hills and the mountains where they're really exposed to wildfire, right? It was a freak thing that wildfire came to my neighborhood. It's not a freak thing if you live out in the mountains.
Do you think that we, as a country in the U.S., that we need to have different policy changes? You think we're at that point? Or do you think that the way that things are right now, that it's kind of good enough? I mean, there has been policy changes, like you mentioned, since you wrote that article in 2012.
We sure need to do something, okay? But it's a really complicated problem. And let me just give you an example from my own rebuild of how it's a complicated problem. When we were rebuilding our house, the electric company, the power company, was willing to give us free trees if we planted those trees right next to our house, because that provided shade to the house, and it meant the electric bills and the draw on the grid would be a lot less. As you might imagine, the fire department was losing its mind over that policy. Or think about the Gulf Coast. The natural topography down on the Gulf Coast is these wetlands that work as a really good natural sponge to absorb water and surge. The problem is they're really inconsistent with having a good shipping channel that can bring in petroleum from offshore drilling into refineries so that we can all have cars that run. And so we have to have a clean ship channel, which defeats the wetlands and creates an absolute pipeline to bring storm surge into the Gulf Coast. So we do need policies, but we cannot act in isolation. If we do one thing, we're going to affect another thing. So we got to really think about it as to how we reconstruct it. And maybe the simplest way to show this is this country knew for decades that health insurance was all messed up. And the way we did health and got medicine and got doctors' care was all messed up. I think you can go back to President Nixon, who started talking about we need to reform healthcare. But it took decades to figure out a structure that might actually do something without causing too much mischief. And that's still a political issue in this year's presidential cycle as to whether we did the right thing.
I've read that the total approximate cost of damages from weather and climate disasters in the U.S. from 1980 to now is at over $2.7 trillion. What states would be like in 2024 going forward would be, you say or maybe specific regions of states would be the worst places to move from a natural disaster standpoint? And then the flip side, what would be the most safe?
Yeah, that's an interesting question. Obviously, Florida, Louisiana, California, Oregon have recurring problems year on year on year. But, think about probably the event that led to this podcast, which is Asheville. Okay. Asheville wasn't on anybody's map until it was, right? As FEMA is fond of saying, if you live any place it rains, you need flood insurance. And if you take a map of where it rains in the United States, that's every place but Death Valley, California. And 2 years ago, Death Valley, California had a major flood event. So, I don't know what safe looks like. I grew up in Texas, and we didn't have a whole bunch of experience with massive flood or fire. But Texas does now, has both, with some frequency. New York City's been hit by major weather events. They have what are called derechos in the Midwest, which are these huge wind events. I don't know that there is any place in the United States where I would say, I'm good. No worries here. We in California, we think a lot about earthquake, but there is an equally big fault line, an equally active fault line that basically runs right under the Mississippi River where Memphis, Tennessee is. And if that sucker blows, the Mississippi is going to flood out the city of Memphis. So who knows what counts as safe now?
We started this podcast talking about the hurricane in North Carolina, and you mentioned Asheville. So most people in Asheville didn't have flood insurance. Like I said, I think the number Asheville specifically was like 3% or less. The vast majority of them will be uninsured against this. So what is their recourse? Then what are these people doing? And not only that, even if your house wasn't damaged, I mean, your place of business might be closed, especially in a place like Asheville where it's a tourist economy. I think they finally got fresh water recently. But if you're working at a restaurant or a bar or any of the tourist sectors, you can't really run a place of business when you don't even have fresh water to drink from. So what would be kind of kind of first steps, walk us through what these people are able to do if they are one of the 97% of people that don't have insurance?
Yeah, it's going to be a long slug. Okay. I have a friend who lost their home in Asheville. It's going to be a long journey, and I will take you through steps, but let me just start by saying that, when my wife and I used to, after the fire, we used to have a running to-do list. Every time we thought of something we had to do, we put it on the list. And every night before we went to bed, we isolated the things that absolutely had to be done the next day. And we were at least 2 months post-fire before we ever cleared the next day's list in that day. So this is a long, long, long journey. Another way to illustrate it is there were 2,400 homes that were destroyed in San Diego County in our fire. We all had insurance. I was the 12th home back from fire to move in. That was 13 months, 12th home out of 2,400. This is a long journey, even if you have the resources you need. These folks don't. So the first thing they need to do, the first and most important thing they need to do is find a secure place to live. Okay? The second thing they need to do is make sure that their kids are being watched after, because kids experience this, tremendously differently than adults do. They take pictures of everything, because very quickly cleanup efforts will change the conditions on the ground. So to the extent that they need a record of everything, they need to be taking pictures, crazy number of pictures. They need to get over being the sort of people who think of themselves as they're the ones who give help, not the ones who need help. And every single time, and this will happen for about a month or two, and then other people move on with their lives, that somebody calls them up and says, "What do you need? Can I help you?" They should say yes. And if they cannot come up with something, their answer should be, "Bring me food, and bring it in dishes and containers that I get to keep because I don't have any." Okay? That's just basic getting your life together, right? There will be some financial resources. If you've lost your home in a documented emergency event, Milton was, you want the printout of that documentation, because you can go to stores and they will give you discounts. There will be charities and non-governmental organizations, like the Red Cross is high among them, that will give you resources. There will be loans from the government that you can take. But you need to think all this through. It may be that starting from scratch with a construction loan is not the best answer for you. You are literally starting from zero. But the other thing to realize is your home may be gone, but the land it sat on is not gone. Okay? The land it sat on is not gone. And it is land that typically, and if it's not in a very deep rural area, is zoned residential, has an existing building pad still on it, has now been cleared. It is good to go for new construction. And in a lot of communities, the value of the land went up. And so you may be able, if you are willing to entertain moving, be able to sell the land and have some resources to work with. Now, that's going to depend on your mortgage, because you're still going to have to clear your mortgage, right? And it depends on a lot of other factors. But it's a long, long slog, and it is heart-wrenching and hard, and it can very much take over your life and your thoughts of who you are. And the real among the hardest parts of it are the world and your community is wrapping its arms around you, but then their lives move on and yours hasn't, and there you are. And so it can be really lonely too.
You said that in some cases the property value went up sometimes. So let's just say hypothetically you're in a desirable location with an old, outdated house that's not very nice. What's the difference between what the increase in that property value is and what the value of that property was with the house? Like, would it make sense? Like, are they going to be a wash, or are they still going to have, hundreds of thousands on that mortgage?
Well, what happens is, so if you have a community like Asheville, where a lot of people have lost their homes, just as a waste management problem, that's a community problem, okay? Just if you think about just your garage, and now and all the stuff that's in your garage that is poisonous or dangerous or something, or you think about the remains of your television set, or all the stuff that's in your house, right? What's left, the debris left on your lot, is not like trash that you put on the curb when the trash truck comes by. Okay, this is potentially dangerous. And so communities don't have a dump that is set up to take this amount of material all at once. So what typically happens is this is an organized community government debris removal. And it's funded by the government, but they get reimbursement if you have insurance from your insurance. Okay? The consequence is, I don't know, that in Nashville there will be a very organized, at government expense, coordinated debris removal to make sure that all these lots are cleared in a way that is environmentally responsible. So when that's all done, if you don't have insurance, it means that you have a cleared lot, zoned residential, ready to build, right? Now, at no expense to the homeowner if they didn't have insurance. That's what I hope will happen in Nashville, okay? And I think it's probably to Asheville's benefit that this is going on during a political season, so every single politician has a strong incentive to make that happen, right? No matter what their party affiliation is. So if that happens, then think about if you wanted to build a home on a piece of land that you had just bought. Well, you'd have to get it zoned correctly. You'd have to clear it. You'd have to get the pad done. If there was an old house on there, you'd have to remove it. All those expenses are off the table. And so the homeowner still has whoever buys that land still has the expense of, drawing plans and getting them through plan check. But they've saved a lot of expenses. That's why for speculators, especially the way you asked the question, which is in a desirable location, this piece of land is a more valuable piece of land than the normal piece of land when they're building a spec house. Does that make sense? Or did I get too deep in the weeds on that?
No, I mean, I just asked me, I used to live in fairly affluent ski towns in Colorado. And this particular ski town had a historic district. So houses that were, I forget the exact year, but it might have been 1980, were worth significantly more than they should have been because you could just knock it down. Versus if you had a house that was older, you couldn't. And so pieces of property were very expensive because the piece of property meant you could do anything because you weren't beholden to this historic district. And so you'd look at some nice house and it was 1.8 million or something hypothetically, but then a empty piece of property was 2.5 million. You're like, well, how is that property worth more than a house? But it's because, you could build whatever you want in that thing. So I kind of,
yeah. I mean, this is a whole conversation going on in Lahaina right now.
Yeah. Exactly.
Out in Hawaii, right? This was a historic home, a historic community, generational property passing from family to family, families that didn't have anything like the resources to buy a brand new lot and build a home in Lahaina if they had to. And now the community's gone. And they're getting into a whole conversation about, do they think they can rebuild historic Lahaina with the people who live there? Because as you might imagine, that for speculators, that's the greatest opportunity to buy land they have ever seen in Hawaii in modern times. And so there's just a whole lot of pressure as to what's going to happen there and whether anything that Lahaina looked like pre-fire is what it's going to look like after the fire, or even if it's going to be the same people.
Since you mentioned Lahaina, is there any updates? You've studied this stuff. That's how long ago was it? Was that a year ago now?
I think it's a year or 2 years.
Was it already 2 years?
And Lahaina is particularly complicated because Hawaii is really small and really isolated. And so it's really insular. And so there's a lot of cultural cross pressures there about who owns Lahaina and who should own Lahaina. There's that whole conversation in Hawaii that is kind of specific to Lahaina, and it's really still gotten caught up in that. The other problem that has happened in Lahaina is that a huge amount of those homes were homes that had been in families for a long time and so were uninsured. And so while those families desperately want to be back home, there just is a real lack of resources to get there. You're probably much more familiar with Asheville than I am. So I don't know if you're going to see a similar dynamic in Asheville as to whether it's that kind of very insular place where families have been there for generations. And so they want to be back right there, but they don't have insurance or means to rebuild. And there may be developers or speculators swooping in with money in their hands. So there's special problems that I think have put Hawaii in much more of a longer timeline than they want to be in.
Kind of circling back to your specific case in 2003 when you lost your house to fire, you mentioned that you were the 12th house out of 2,400 to be rebuilt, and it took 13 months. So how long did it take the 2,400 house if it took you 13 months for number 12?
Oh, the 2400th house is still not built.
It's still not built
because there's an empty lot still on my street.
Right.
That's
so what about
21 years ago now?
What about the 2000? I guess the real question would be then, how long would it take for that? How long will it take for Asheville to get back to quote unquote normal? Same thing for Lahaina, and then in your situation, it never got back to normal. Then if the 24th house isn't built, or they just choose to go someplace else?
I think in something that feels and looks normal, in a community that is insured, you will, it's probably a 2 to 3 to 4 years is probably a reasonable timeline. 2, you'd hope that more than half are back. 3, a significant chunk will be back. But for instance, if you look at the ward in, I think it was the 9th in New Orleans, when the levees overtopped, which was this community of very much lower middle class or poor families. But they were generational homes, and I think they had the highest percentage of home ownership of almost any community in the United States of America. But they had no insurance. That, you can go there today and it's still largely not there. And that was 2007, 8, something like that, was Katrina. So
was Katrina 2005? I thought Katrina was 05.
You're right. It's 2005 because it was in between the San Diego fire that I was in and the next one, which was 2007. Yeah. So yeah, it must have been about 5. Yeah. So yeah, this is going to be real specific to this community, how much of it is gone, right? Because if the community is primarily still there, that makes it easier to rebuild the part that isn't there, and how much of it is insured. And then you put on top of that the willpower of the government to deploy fairly massive resources. And that's not necessarily an easy question, because I don't think Asheville was thought of as a particularly risky place to live, many months ago. But you might have a whole different conversation now about how robustly you want to rebuild it.
Asheville is known for its bars and restaurants. I think it has several James Beard award-winning restaurants, and it's got a lot of breweries. I believe it has the most breweries per capita, maybe with the exception of like Portland there's some stat I don't remember exactly. But how does it the insurance work for, say, a bar or a restaurant, like a commercial? Is that the exact same insurance that you'd have on a residential property? And then secondly, like if you're one of these bars or restaurants, will you just never reopen? I've read a lot of reports that a lot of these are like, yeah, we probably just won't reopen. I mean, if you didn't have, so they also don't have flood insurance. Is that very similar insurance for both residential and commercial?
Yeah, I mean, It's a different insurance product. It has different coverages, but for your purposes, it's fundamentally the same problem, right? So for instance, if you had a home insurance policy, you need insurance coverage for your living expenses when you're not in the house. Commercial property doesn't have that, right? No one's living there, but they do need different kinds of coverages for, their profit stream or other things. In other words, there's unique aspects to a business, there's unique aspects to a home. But broadly speaking, you insure the structure, you probably insure the contents of the structure, and that's what you have, right? And you insure for fire, and you may insure for flood.
How long will a place like Asheville, which is mostly uninsured, will this place just never be back to like the Asheville it used to be? I was talking to a few friends that live there, and they're like, "Oh, it's going to be at least 5 years before it's recognizable."
Yeah, I think Asheville will reinvent itself.
They'll have to reinvent itself, right? Yeah. It's same thing with Lahaina.
Yeah, you're going to see a community there that will be vibrant again, will be a nice place to live again, but it will be shadows of what was there before. And, you'll go through a grieving and a loss for your community, and over a series of years, that memory of the old Asheville will become a memory of the current Asheville.
I watch a lot of U.S. congressional hearings, and I watch a lot of the ones of the U.S. Forest Service. Obviously, I have a pretty exciting life that I watch this stuff, but we're
talking about the sexy topic of insurance.
Right, exactly, right. Exactly. You know what we're talking about, Ken, yeah. But, since you mentioned Lahaina, and there's a lot of reports that the power company just didn't have proper maintenance of trees. There's a lot of power lines that had trees draped over or just looked like major fire hazards. And then the same thing in California, where in these congressional hearings that I listen to, there's certain chemicals that they're not able to use to put out fires because they're banned by one of the other, whether it's the EPA or one of the other organizations, and they can't do a lot of clear cutting and things that they used to do, just, forestry management. And of course you have bureaucrats in DC telling people in California essentially, or, Hawaii, how to run their, each one of these states can have different particularities that only local knowledge could really solve. Hurricanes, I think, is different just because, swell coming up and smashing Miami. I don't think that has much to do with policy. But like, what about in the case of like Lahaina or California? How much are these government bureaucrats responsible? Or in the case of, I guess, Lahaina, more so the power company. But is that true? Like, just not maintaining clearance around these lines? Is that part of the issue?
It's almost certainly part of the issue, but it's always complicated, right? So, for most of history, you wanted to get off the beach as quick as you could. The beach was a dangerous place to be. It's only a very recent thing where a beach is the place we want to go and we want to build and we want to own, right? Why do people have homes in the forest? Because it's beautiful. It's gorgeous. It's a great place to have a home. And yet all those trees are going to burn, right? So these are complicated questions. I can tell you for a fact that I can have a home that is going to have a much greater chance of surviving a fire up in the Appalachian Mountains if I clear all the trees that are around it for about, 100-yard buffer. But those trees are the reason I own that home, right? That's the whole point of being there. So, and what's the fun? What's the joy of having that home if you don't have electricity? Look, I have friends who own homes in the mountains with no electricity. They think that's a plus. That's not my view of a plus. Okay. But that's a long reach to have a power line that only reaches that home by being underground. So you probably can only get power there through these overground power lines. Well, that power line looks like just a power line until the wind comes up. And when the wind comes up, that power line works just like a sail on a sailboat. And so for frequency is going to fall down, and that's a live electrical line. So one of the debates we have out here in California is the power company, when the wind gets over 50 mile per hour, shuts down the power in the backcountry to keep power lines from setting fires. Well, that's all well and good, except in the backcountry, we do not have permanent or full-time fire departments. We have volunteer firefighters and homeowners and property owners who fight fires by pumping water from wells. And those pumps run on electricity. So once the power's down, you can't pump the water. So, I believe me, if there were easy fixes to this, we'd have done them already.
How does the property taxes work in this situation? Let's say you lose your house, and then are you still paying the same property tax the next year, or they go in there and reassess that?
Well, that was a really interesting thing in my county, and I don't know anywhere else. I only know the experience I had. But in fact, I do know what happens is each community will make its own decision as to how its taxes will respond. I have seen communities that say, oh, look, we're going to have a bunch of new construction here. That's a real revenue opportunity for us. And so we're going to treat the new construction just like any other new construction. And so people's property tax bills are going to go way up, right? Because that's going to bring us a lot of money. There are other communities that say, man, these folks have enough problems on their plate without this. And so, for instance, when we rebuilt our house, we lost a not particularly interesting 2,200 square foot house. We replaced it with a custom built, very nice 2,600 square foot house. What the city of San Diego decided was the first 2,200 feet of our house would hold the tax base of the lost house. The additional 400 square feet would be taxed as 400 square feet of remodel addition and be separately appraised. So each community will make a choice, and it's a political choice. They're weighing revenue versus constituent unhappiness, right? And they'll make their own choices that'll be very specific to how those politicians read the politics of their community.
My friend, he lives in the city of Louisville, Colorado, which I think it was a year or two ago, which had major wildfires and a lot of people lost their homes. Yep. And this is for people that don't know. It's basically outside Boulder, Colorado.
Yeah, I think that was the Marshall Fire.
Yeah, it's the Marshall Fire. That's correct. And he says that he knows people that live on the same block as him, and their insurance didn't change, while other people on the same block, their insurance skyrocketed after, even with the same insurance company. So, like, how does that work? Like, in the exact same, Superior and Louisville aren't very big. Why is it that certain people in the same community that had the same event have a much different experiences down the road with insurance?
It's almost certainly because they have different insurance companies, and insurance companies respond to an event differently. So some insurance companies will say, there's not a lot of money in capturing new business. All the money is in retaining your customers. We don't think there's going to be another fire anytime soon. We're going to try to make sure we retain all of our customers and help them get back, because that's our business. That's what we deem as a good business model for us. There'll be other insurance companies that say, man, this caught us by surprise. We're not confident that we know how likely it is to happen again or not. We're going to really crank our premium up because we can't be confident that we're not going to have a big, large loss in the future. If you don't like it, find somebody else. There'll be a third set that simply say, we're done. We're out of here. We're not going to insure this community anymore in this zip code or in this city. So it is really insurance companies. Each insurance company is looking at their experience in that fire and saying, what does that tell us is the best business choice for us going forward? And different insurance companies come to different business decisions.
But he was saying even with the same insurance company would be charged. I mean, he's been a real estate agent there for 40 plus years, and he says that a lot of people that he talked to would have the same insurance company.
That's strange.
Is that strange?
I wonder to what extent that is sort of micro topography. Like, does one house back up to open space while the other house doesn't, or does, things like that. The rating of an insurance policy and the pricing of a quote is a world unto itself that I am delighted I do not have to know in detail.
Yeah, I mean, I lived in Colorado ski towns for a decade, and the mountains create their own weather systems. You could be on one side of the mountain or the other side. As a crow flies, you're 4 miles away, and one side's got 8 feet of snow that day, and the other side is sunny. Even though you're 4 miles away, like you could be really close and have a completely different experience.
Yeah, well, I mean, just think about my street. My street, we had 20 homes in a row burned down. Then it skipped 3. Then it burned another 10. Then it stopped. I was one of the 3 initially it skipped. But then somebody's house down the road from me had a wood roof, shake shingle roof. That house exploded. The roof blew backwards, landed on my house, broke through my roof. My house burned inside out. First thing that caught on my house was the sofa.
What would be your advice for people to, I guess, protect themselves? Like in Nashville, no one had flood insurance. No one thought it was going to happen to them. Same thing in Florida or wherever. So like, what would be your advice so you're never actually find yourself in a situation where you get hit with a natural disaster and don't have any insurance?
So what I would say is, first of all, if you can afford it, buy it. Second of all, ask the insurance company what aspects of your house, what you can do to make your house resilient, that they will reward by lowering your premium if you do that. Because those are the folks who really know what works, right? That's why they'll lower the premium. Third thing I would tell them is, if you're buying fire or flood, or fire or wind insurance, so insurance where there's not an imposed cap like there is on NFIP, whatever is quoted as the estimated reconstruction value, assume it's low. In other words, ask them for a price. What if I wanted double that? Right? Last thing I would do is, any agent who sold me any insurance product and gave me a quote, I would ask them in an email, I don't know how much insurance I need. I'm depending on you. If my home gets wiped out in a hurricane, a flood, a fire, whatever the event is this enough in your opinion? And don't buy that insurance until you get a yes, because that will at least give you a written record, that being your email record, that you were relying on them to tell you what was enough insurance. And that'll at least give you a chance, if you have a total loss and it's not enough, that you might be able to have someone else fill in the shortfall.
Ken S. Klein was today's guest, a professor of law at California Western School of Law in San Diego, California. Thank you for spending an hour with us today. Just have a final question for you, which is just leave us with a final thought.
Sure. I always feel like, I'm a real downer to talk to, right? So what I would say is this. My home, my neighborhood lost 312 homes. It's an astonishing number of homes in a single fire. My neighborhood has 12,000 homes. In other words, 11,900 folks didn't lose their homes. So we want insurance. It could happen to us, but be not afraid. Most of us are going to be okay. And I think the last thing, and I really want to say this to people who do lose everything, a natural catastrophe, a hurricane or a fire, it's not who you are. It's a bad thing that happened to you. It's only who you are if you decide that you wanted to define who you are.
My dear friends, that is it for this episode of El Podcast. Once again, if you're not yet subscribed, please subscribe on YouTube as well as Rumble. You can also find us on Spotify and Apple Podcasts or wherever you get your podcasts from. We thank you all from the bottom of our hearts for watching and listening, and we will see you on the next episode.